In this video, I'll show you how to use the volume profile, and this is how I use it to mark out daily levels of interest. You can get some really good setups using the volume profile. So I'll show you, number one, how to mark it up, number two, how to read it, and then a few examples of this thing working in action. So this is just using TradingView. You can find the volume profile on most trading platforms, but if you use TradingView like most people, just down here, if you go 1, 2, 3, 4, 5 symbols down on the left, expand that out, it's down here under the volume based indicators. Go for fixed range volume profile, and all I'm doing is marking that out from midnight of the previous day's trading session, Eastern time, New York local time as always, to midnight of the current day's trading session. Now when you're coming in on a Monday, I obviously mark out Sunday as well. Put Friday and Sunday into one, so that's Friday midnight through to Monday midnight for Monday's trading action. But on a regular day, you just do midnight to midnight. Just keep that in mind there. So that's the volume profile there, right? So I'll show you how to read this first of all. All the volume profile is doing is showing you the levels of price where there was the most interest from buyers and sellers at a time. And one thing the big boys can't do is they're not very good at hiding volume. They can hide their orders. They can hide their intentions from us for the most part on the DOM and whatnot, but they cannot hide actual executed volume. So we can kind of see the intentions of the institutional players by which levels have the most volume, what levels of price they're most interested in transacting at, which is why this is very useful. So the volume profile here, I mark it out across the previous day. Say we're coming in to trade Monday, I'll mark it out across the previous day's session, so Fridays. And what I'm doing is, you see how there's kind of like a faded area here and then a bright area here. The bright area marks out the value area. So what we're doing is first of all marking out the value area high. The lowest portion of the brighter profile just happens to be the low of the day as well, of the previous day. That's our value area low. And that red line that extends out there, that's our point of control. So that's what I'm also going to mark out and extend into the current trading day session as well. So I'll annotate those. We got previous day value area high, previous day value area low, and then right in the middle, that red one, I normally style that as red as well and mark that as previous day point of control. So I have those all labeled, and I do that every trading day coming in, okay? And these three levels here are used in very similar manners. Basically, just to put it in plain language, I use these as areas of true support and resistance. See, regular support and resistance, traders just mark out some areas where there's a range, a range of highs, a range of lows like that, and they use that as support and resistance. There's not really much to that other than just visual candlesticks and seeing, what range is forming. That's not enough for me. The volume profile shows true levels of support and resistance as areas where there are the most volume, like the point of control, very unlikely to be broken through in a hurry. And the value area highs and lows act in similar ways as well. So in this example here, you can see the previous day point of control on the London Open here at 3 a.m. We got a retest. It tested it twice, but test, and had both times had a good reaction from the point of control. Even came back and tested it again around 5:30 in the morning, and we got that nice bounce from the point of control. So depending on which side of the book we're on, if we're above the point of control, I like to use it as an area of support. And if we're below, I like to use it as an area of resistance. That's how I use the point of control. Very simplistic, but very, very useful. And I'm an order flow trader, so I do use the DOM and market footprint charts as well. So I don't typically like to just blindly long from these levels. You can do that, as you can see. Obviously, if you only trade charts, you can do that, and it is still a pretty reliable level to trade from. But I like to confirm things with the DOM and with market footprints, and basically see if there's bullish absorption down here, if there's sellers are pulling from the book and buyers are starting to stack at these levels. Then I like to confirm, okay, it looks like we're about to go long here, then I'll jump in. But you can also blindly long from that if you were so ballsy. Not for me, but just so you can see that in action. Now, unfortunately, on this trading day, the value area low and value area high were not traded to, so we'll jump to some previous days to show you an example of that, the value area high and low in action, so you can see how to use those as well. If we look at the day before, this is Thursday. Thursday's volume profile, we're drawing that across, imagining we're coming into trade Friday, which is this block of price action. So this is Thursday's volume profile drawn out, again marking out the previous day value area high, previous day point of control, previous day value area low. So first of all, you can see that on Friday, the value area high is used in two ways. So I like to, number one, I like to look for shorts when we're above the value area high, because relative to yesterday, we are trading above value. So prices are expensive relative to yesterday. So I do like to look for shorts. However, like in this case, we can see here that if we're above the value area high, and we come back down to value area high, and we start to see that bullish absorption or signs of bullish order flow at that level, these are also used as levels of support as well. So you can see here, we came down, tested the value area high to almost to the tick, and then bounced up quite high again before eventually melting down. And even when you melt down, if you push through the value area high, like I said, that support becomes resistance. It push through. If you confirmed on the DOM and other order flow tools, if you use those to see that, you know, price is indeed wishing to continue lower, you can also see here, price on this wick here, price retested the value area high before continuing to melt down. And it did the same. It came through to point of control, blasted through it, retested on the other side, dropped again. We touched the value area low, bounced a couple times, ultimately dropping through it, retesting on the other side before continuing to drop. So these levels, value area highs, value area lows, and POC are, like I said, true support and resistance. And just like with regular support and resistance, when support is broken, it becomes resistance, and when resistance is broken, it becomes support. So that same principle applies with these. It's just the value area high, value area low, point of control areas are all, there's more logic behind that, okay, because these are areas of high volume, high interest, rather than just marking out random lines on the chart. You've actually got some logic behind these levels. So I really have been enjoying using these levels as indicators and for context to see what kind of trades I should take depending on where we are relative to these levels each day. And every single day I have these levels marked out on the chart, because you're bound to get a good setup from these levels. Obviously, sometimes it does break through. Like you could go long from the point of control and then get blasted through here before it retests the other side and continues down. But that's why you confirm things with order flow and market footprint and the DOM. Those sorts of tools can help you to avoid getting blasted like this. But nothing's a magic bullet. Nothing's going to work 100% of the time. But this is how you add extra context to your trading every single day using volume profile. It's a good one. Closest thing to a magic bullet I've found so far when talking about order flow trading. Been a very useful tool, and you see how often these levels get reacted to. I personally like to just use the previous days. Some people like to have multiple levels marked out for the week. As you can see, they are reacted to as well as time goes on. But I prefer the more recent data, just a personal preference. Anyway, I hope you guys found that video useful. If you want to see this more in action, I'll be using this on stream during the London sessions that I'll be streaming for the near future. So catch me live on YouTube at 3 AM Eastern time. And you can see me using this to take trades from. So I hope you enjoyed that. Like the video, comment below if anything didn't make sense and what you want to see in the future. And make sure you're subscribed. Thanks.